Hey everyone, welcome back to the channel. If you have been tracking the markets along with us, you will know it's been a roller coaster for almost a week. But today we have seen some exciting moves. Indian indices have staged a strong relief rally, with the Nifty and Sensex posting massive gains. Let's break down what's driving this surge and what it means going forward. The Nifty jumped 500 points, closing 2.19% higher, while the Sensex soared 1,577 points, up 2.10% in a single day. This rebound comes after recent volatility, signaling strong buying interest from investors. Are we seeing a trend reversal, or is this just a short-term bounce? Let's dig deeper in the later part of our analysis. Broader sectors as well gave a big jump. The real star of today's rally was realty stocks. It skyrocketed 5.64%, a clear sign of bullish sentiment. Auto sector as well zoomed 3.39%, possibly on positive demand expectations. Metals as well gained 3.2%, riding on global commodity trends. Financial services sector rose 2.95%, with banks and NBFCs joined the party. This broad-based rally suggests renewed confidence across the board. But the question is, will it sustain? Indian markets weren't alone. Global indices also cheered. Asian markets closed 0.2% to 1% higher. European markets traded 0.8% to 1.5%, which was up. US markets, however, were flat at the time of recording. This global optimism could be supporting India's up move. But with US markets muted, should we stay cautious? Oil prices sink further. That is a good news for India. WTI crude was down by 0.42% at $61.27. Brent crude again was down 0.46%, which was trading at $64.58. Now, lower oil prices simply means reduced inflation risks and better corporate margins. Will this fuel more gains ahead? We have to wait and watch. Now, let's jump to chart analysis for the major indices. So, this is the Nifty 50 index. So, as you could see from yesterday's close, there was almost a 500 point jump that we had seen. The markets open quite higher, and then there was some sell off that was seen. However, the sell off sustained for almost the entire day with no major moves throughout a given day. Now, this suggests that there is a renewed buying at the lower levels, and market is not willing to come down from the levels that it traded. So it was quite muted today with no much volatility, no much movement, uh, no big moves that were seen from the start till end. So what is in place for us maybe in the coming 1 or 2 weeks? Simple, as long as 23,300 odd levels is sustained, market gradually will be moving or inching towards higher highs. Now, until this previous resistance that we had seen it reaches, then we would see swiftly market moving on the upper side. It is a clear sign of low that has been already considered now, or maybe we can say this is the bottom that we have made at least for 3 months time frame, and then from here we will start moving on the higher zones. As you could see from the historical scenarios, so we were trading on lower highs and then lower lows. So each time if you see, there is a lower high compared to this high, and there is a lower low here, and there is a lower high, and there is a lower low here. So, but however, at this stage, there was no lower high. There was a lower low, but there was no lower high. The high was, exactly previous to this level. From there, it reversed back and then gave you know, a bottom, And from this bottom there was a relief rally that came in a week's time. So we have roughly captured around 1500 points just in 5 trading sessions. So it's very evident that at the bottom there have been lot of strength in terms of buying, and we might not further cross and touch these levels at least in 2 to 3 months time frame. Now what is there on the upside? Markets can surely make higher highs from here, and we would start seeing these kind of patterns, higher highs. So the first resistance for us would be this 23,700 odd levels or 23,800 odd levels. Once this resistance is taken down, the next further resistance would be at the 24,200 levels, and then further at 24,800 levels. All this can be achieved just in 3 weeks time frame, provided if there are no negative cues coming from the world markets, and there is no surprise that comes in, maybe due to war or any bad news. So considering this, it is very evident and clear that we are moving towards high, and soon, maybe by the end of this month itself, we might close about 24,000 odd levels. So it is just 700 points from this place, which maybe could be captured in the next 2 weeks by the end of April month. Now let's talk from the perspective of open interest. So as you could see, at all the lower levels we see good wind up of call positions that has happened. However, at the higher levels, at least for the 17th April expiry, we see lot of call additions that had been seen in 23,500 strike, and then further at each 100 points. This could be majorly because of the one day that is left for the weekly expiry. 2 days that are left for the weekly expiry. Now here, as you could see, there is a strong support that has come in today at 23,300 odd levels. This support will surely sustain for the next 2 days. Assuming if this level breaks down, then we have 23,200 levels and then straight 23,000 levels. But looking at the positivity that we had seen in today's rally and the muted performance that it had given throughout the day, there are very low probabilities that the market is expected to close below 23,000 odd levels, 23,300 odd levels. So our expectation is it should trade in this range for next 2 days as a part of the expiry strategy, or it might cross maybe 23,600 levels at max. There is very rare possibility that we might again see a big rally coming in just on the expiry day or tomorrow. So overall, there is a positivity in Nifty, and we might in the coming expiries soon see we inching towards 24,000 odd levels, because there is no quick resistance here from 23,600 odd levels. On the PCR front, overall it is zero point 0.8, and at the money it is 0.67, which is neutral. From the perspective of Sensex, as long as Sensex sustains 76,300 odd levels, this we will surely be able to see that strong support coming in at all the lower levels. On the higher side, the immediate resistance for Sensex is the previous resistance, that is 78,800 odd levels. Since there was a big jump gap up that has happened, we might sustain at 76,000 odd levels, which is a round off figure, and then from there we will this will act as a strong support and continue moving higher highs this way. So once this 78,800 levels get broken, we will be able to see a swift rally that comes in at least for 2000 odd points, and then our immediate next resistance would be this level, 82,000 odd levels. So till then we have a big space for Sensex to move roughly around 3000 odd levels. So maybe in 2 to 3 weeks time frame, we will surely be in a position to see Sensex moving towards 82,000 odd levels. uh, s- Strong support is there at the bottom levels, and we might consider for at least next 2 months this bottom we may not be touching. So 71,800 or 500 odd levels was the low that it had made, and then from there, just in 5 trading sessions, there was roughly around 5,000 odd points jump. And this another 5,000 odd points jump we will be able to see in short 2 to 3 weeks trading performance, because there is a good base or strength that has been made at these levels, and this would act as a strong support, and gradually market would be inching higher. Now from the perspective of open interest, since today there was an expiry and we have taken the um, open interest data for 22nd April. Now you would see a lot of positions that have been taken at this zone, somewhere from 76,500 odd levels to 77,000 odd levels. Now at least for 22nd expiry, there has been a lot of additions in the calls that have been seen. Similarly, on the put side too, there have been strong positions that have been taken for 76,500 odd levels. Looking at the bars, it seems to be difficult that we might fall below 76,500 odd levels, at least for 22nd April expiry. Now, in tomorrow's trading session, if we see 300 points odd jump again in Sensex, then we would be seeing a lot of unwinding of positions that might happen at 77,000 strike, and then we would see a good support coming in with the put writing that can happen, and then gradually we might expect 78,000 odd levels to reach just in a short week of 1 week's time frame. So at least from the charts perspective, it shows a lot of positivity and strength. However, looking at the open interest, we see a lot of resistance at the higher levels, but um, uh, time will only say how these resistances can surprisingly change into support zones. So we'll wait and watch maybe this new week expiry for Sensex, how it is going to be. So from the perspective of PCR, it is 1.3, which is quite strong overall, and 0.76 for at the money. Bank Nifty comparatively has been performing really well versus the Sensex and Nifty indices. So we have already seen it closing well above the previous resistance of 52,000. So we have already been above 380 odd points versus the previous resistance. And since the next resistance for us is only going to be 53,500 odd levels, so we might see a relief rally coming in a week's time. By the end of this monthly expiry, Bank Nifty will at least be closing above 53,500 odd levels, and might be by the end of this month we might see Bank Nifty hitting 52-week high. So at this zone, there have been strong support. In fact, this entire rally that we have seen has been showing a lot of strength for Bank Nifty or maybe banking stocks. Unlike Sensex and Nifty, we did not see a lot of drift on the lower side. However, there was like roughly around 60% resistance retracement that had happened at the higher levels, and it acted as a immediate support. And then from there on, in just 5 trading sessions, we have already crossed the previous resistance. So this in itself shows a lot of positivity and strength in the banking stocks, and taking down another 1000 to 1500 points in 2 weeks time span is not going to be much difficult from here on. and given the fact that banking stocks have been trading positively with a lot of strength, we might soon see bank nifty indices hitting higher highs and taking down the 52-week high max by maybe end of this month. Now let's try and understand from the open interest perspective. So since there is expiry on 24th April, so we see a lot of call additions as well as put additions at each higher levels. So similarly, before the jump, we had seen before today's jump, we had seen there was resistance at each of the 500 or 1000 odd round figures. However, with immediate gap up of 2%, we 2.5%, we have seen there is good open interest on the put side that has been built from 52,000 odd levels to 52,500. This shows a massive strength, and bank nifty may not close the monthly expiry below 52,500 odd levels. So at each higher level we see some open interest built up being built on the put option side, despite there is a big bars or huge open interest on the call side which acts as a resistance. So maybe in this expiry we may not almost move towards 54,000 levels. That is when a lot of call option writers are positive that at least in a week's time we may not jump 1500 odd points. That is when you would see a big bars with high open interest positions being held from the start of the month itself. So those positions have been continuing. However, if you see at 53,000 levels, we already see unwinding that had been seen, and there is no huge additions at the higher levels. So whatever initial positions that were being taken, only those are being held. No new additions, higher additions have been seen. So this in itself says that if bank nifty jumps maybe 500 odd points from here, again you would see a lot of pressure coming in for the call writers, and then we would slowly start seeing the writing can happen, and then there would be a massive increase in the put writing, which will act as a strong support. So PCR overall is 1, and at the money it is 0.78, which is slightly positive. Now, from the perspective of Nifty Financial Services, so we spoke yesterday that FinNifty might, hit 52-week high maybe in a week's time. However, with the opening itself, it had already hit the 52-week high just in one trading session, and then at the higher levels, we saw a lot of shorting that had happened, but still we have closed at the higher levels, and then from here on there is no stopping for financial services stocks, and that is when the indices would soon hit 25,500 odd levels and above. So a lot of buying strength has been seen at the lower levels of 23,600 odd, and with the 200 point jump, 2000 point jump, this significantly shows that there is a lot of strength in the index, and at each of the lower levels there have been significant buying that has happened, and then this buying will lead to the new higher highs for the FINNIFTY index, and then in no time we could expect this index to touch 26,000 odd levels. Amongst all the indices, FINNIFTY is the only indices which has hit so quickly the 52-week high from the lower levels at this zone. So in just 2 months or time, we are already seeing the highs, FINNIFTY reaching the highs and taking down its, the previous 52-week highs. Now talking from the perspective of open interest, so it is very evident by this 25,500 strike, almost 40% of the open interest positions on call have been wound off, and then at 27,000 25,700 levels there have been massive build up that has seen. So call writers are anticipating that FinNifty can cross 25,500 odd levels uh, in this month's expiry. However, there are low probabilities for it to move forward 25,700 to 26,000 levels. That is when you see there is good call additions that have happened at these strikes. Similarly, on the lower end, if you see 25,000 now is expected to act as a strong support by good build up from the put writers, and then in between this zone there is going to be a tug of war between the call writers as well as put writers. However, with the positive momentum across the markets, world markets, as well as in our benchmark indices too, we have been seeing. So considering that, maybe we would somewhere close in the range of 25,400 odd levels to 26,000 levels by this monthly expiry. So still there is good room for FinNifty to trade around 4 to 500 odd points, and give a high of 25,700 odd levels from here in maybe 2 weeks time frame. So talking from the perspective of PCR, it is 1, and at the money it is 0.67, which is slight positive to maybe neutral. But yes, looking at the overall open interest as well as charts, there is no looking back from here, and we would see a good strength at each 100-point level. The initial strength or support would come at 22,200 odd levels, and then at 25,200 odd levels, and then 25,000 levels. On the higher side, once we cross 25,500 levels, then we would touch to 27,700 levels, and then we can move towards 26,000 levels too by the end of this month expiry. So let's wait and watch how the markets are going to react in by the end of this weekly expiry for other indices. Now, the last topic, the FII and DII movements. So as you could see, FIIs have been short on index futures by 87,347 contracts. They are short on stock futures. They are massively long by 17 lakh contracts. On call options, they are long 1.99 lakh contracts, and on put options, they are again long 2.38 lakh contracts. So net, if you see, FIAs are still short by 38,740 contracts. On the proprietary traders, they are uh, short on index futures by 24,482 contracts. They are long, mildly long on stock futures by 3.08 lakh contracts. On call options, they were negligible short by 8,000 odd contracts, and on put options, they were massively short by 90,894 contracts. So net, proprietary traders have been on the long side by holding long positions in overall, index options. On retailers, if we talk, they have been long on 32 on index futures with 32,788 contracts. On stock futures, they are massively long with 18.07 lakh contracts. On call options, they are short by 1.91 lakh contracts, and on put options, they are again short by 1.89 lakh contracts. So net, they are short by negligible contracts. So overall, client or retailers have been massively bullish for almost a week's time, and they have gained a good profits. That is when, if you look at the index options, now they are neutral, meaning to say they would have taken short straddles for the immediate expiry for Nifty. Now, looking at the data points, so FIIs have been short on index and proprietary traders were also short on index, but this was capitalized mainly from the retail traders. However, today they are net short. So that means all the three participants are mildly short on the index options. So we might not see a lot of movement, at least for the tomorrow's trading session. And then maybe Thursday again we have Nifty expiry. So we might see a good movement happening again there on Thursday's trade. But tomorrow would be expected a lackluster day with no much volatility, either on higher or lower side. Yeah. So what's next? So is this the start of a fresh bull run or just a temporary bounce? So let me know your thoughts in the comments. If you found this update helpful, smash the like button, subscribe to our channel for more market insights like this, and hit the bell icon so that you do not miss our next analysis. So thanks for watching and see you in the next video.